Greetings, Jedi traders. David here of Trading Fibs to bring you the daily trend for week 26, June 27th, 2016. As always, please seek financial advisor when trading with your money, as these videos are for educational purposes only, to support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. As we roll, Brexit, post-vote, chaos, volatility, and uncertainty to use as a catalyst to move the markets. Exactly what we're happening. The judgment's out there, and it's up to the bigger picture, bigger players to determine which way we're trending. Economic data for today, Monday, June 27th here. Very light international trade. It really is about the rest of the week as we lead into a pre-holiday weekend. Let's jump right into week 26. How do we do today? Here we are, 3 markets, 8 setups. The majority of those on the NQ, just trying to get something going here. Today, totaling 158 ticks. Take what you can get, piece of the pie, and roll. Yep, there it was. There's your ES. Taking a look at the usual setup on a 5-4 Flex Renko chart using the CR chart platform, or just using a 6-tick overall 5-tick. There was a lot of noise on those charts, so what you had to do is simply just change the time frame, and there you go. A little bit easier to manage. So kind of got that feeling from the get-go. Tried out a couple different time frames, finally settled on one time frame, and markets eventually found some pockets of trend here and there, and able to stay in that trend a little bit longer than being taken out. But it was the trend for the morning session, really, which was the best. 50 below the 144 as the markets came off. Not much action from Sunday and overnight as U.S. continue to roll down. Who knows? Like I said, catalyst giving a fault for Brexit to sell off markets. You never know. It doesn't matter. Intraday, got to be ready for both directions. So that set up some good trends to the downside. They're set up one of our good setups on the NQ, really set up number 1 in the session, as we saw T3 moving averages cross over. Only 2 charts in the red down here, but again, price action was underneath the higher time frames, which gave a nice signal. Manage it on the way down, take one off, and then saw price action coming up closer, so decided to just bail on that. Here we had 2 setups. One, that 16-tick setup on the ES to the downside. Again, 4 charts in the red, really nice setup. And again, on a higher time frame here, but again, this was a pullback, which had 4 stripes in the red, giving you the highest probability trade to the downside. There was one of our other key setups today. Again, downside on the NQ. Really nice setup. You have 3 charts in the red. Price action, again, underneath the 2 higher time frames, which increases the probability to the downside and to keep you in. But you can only manage it so far. And there's one of our later trends. What time was this at? This was around, that's right about afternoon session. Price action was really chopping all the way across and just finding looking pockets. There it is, the sister AD line. Taking a look at that, almost very similar to Friday's action as we left it. Let's go ahead and just take a look at today's action as we saw the AD line at first to the green. These are, again, 10-minute charts, so price action lifting as price action on the AD line's upside, and you got price action coming downside. So there's another divergence. Go with the highest probability on the chart. Market internals, as many as possible, supporting the move in the direction. So there it is, that move down that we had on the majority of the indices here in the morning session up until about the European close, which pretty much closed out here near the lows. Price action getting a lift back upside, and it was just pretty much flat across the board. Let's take a look at the 5-minute charts, again depicting the 25-minute open range where crude kind of held out for a while and drove downwards. Crude, again, why? Well, inverse relationship to the dollar, some of you may say. Of course, crude can do what it wants, but of course, what does crude have to do with the Brexit vote in the big picture? So, hey, markets will use anything to move price action, but crude getting a nice little afternoon move back upside towards the open, so we're still sitting in the 46s, so not too far off from that 50. As you can see, pretty much across the board, ES, YM, and NQ with those drives down today, but price action really battling it out here on the 5-minute charts, not really being able to push above any of the cam lines, both across the board as well as the NQ down here in the lower right hand corner. not really being able to push back up to today's open, but pretty much dropped out of that 25-minute open range and just chopped the remainder of the session down towards the lows. All right, let's jump right into the daily trend. But before we do that, any significance on the Fibonacci levels? Oh, yes. Yes, we did. Price action pretty much closed out all three levels downside. So there we are, 1 for 1 for the week on all three. And price action actually remained pretty much downside, as we just saw on the 5-minute chart, at these three Fib projection levels based on Friday's price action. Let's jump right into the daily trend, as we'll start out here with the crude. Again, crude, we saw price action coming down. There was pre-market price action. Again, crude just reacting to a lot of the market indices and dollar there as price action. Again, what are you looking for? The highest probability, which would have been right here on the sell signal downside. So crude coming down. We'll take a look here at the daily gap in a little bit and see if there's any more room for this to come down, or are we set to go back up. But again, trend finds some traction back to the upside, and there you are for trend catching up, but not exactly in a strong trend. So pre-market looks really good, a little tough during the market open and post 1 hour, and then there it is, one of the best moves on crude to the downside. All right, taking a look at YM. YM again, here it is on a 10-tick range chart, and as I said, lots of noise all across the board. Just looking for a setup. You got 3 charts in the green, 4 charts in the green. You got a buy signal. Maybe you got a couple ticks to the upside. Here's three charts in the green here at the European close. Market lifts up. Nice move. If you wanted a little bit less noise, you would have simply, that's right, just gone to the 20-tick range chart. Would have kept a lot of that noise out. Maybe even just fewer entries, but higher probability entries that might have worked out a little bit better. So there's that morning session, like I said, which had a much better picture. You could see the 50 below the 144 in the red down here. Just sketchy in the afternoon as it got broken up across the 50, 144. Take a look at the NQ, again, higher time frame. Look at it, a 20 tick. There's that nice move down, keeping you in the trend all the way down. European close, you're done by the lunchtime hour. Not bad to wrap it up for the day. Consider it summertime trading also, as price action pretty much washed itself out. Taking a look at the ES, same picture. Jumping from that 5.4 to the 6.3, sure tightened things up a lot. On that 5.4, had a lot of noise. 6.3 had some nice trending moves in the early morning session, including up to the European close. The remainder of the session pretty just sat out. You had one nice move on the sell signal here, but again, if you're looking to line up bigger time frames with the smaller time frames, bigger time frames were just not in trend to match up with the smaller. So you would have stayed out of the afternoon action for the most part. Taking a look at the gold. How did gold do today? Price action again after popping up to those 1300s. We're pretty much settled here. Again, this is gold on a higher time frame, 20 tick. You can see 3 to 4 charts in the green. Again, nothing wrong with this price action as it kicks up above the T350. A good signal to the upside on crude. Gold pulls back. If you're out, you look for the reentry on the buy signal and to the upside on 4 charts in the green. And that was pretty much it. You had a little afternoon session here on the gold, and then to the downside, higher probability on the move in the afternoon right here at around. And I'm sorry, actually, I'm skipping 2 days. This is a 10 tick. This is a 20 tick. So again, here we go, 10 tick. That's what I was looking for on the gold. There's today's market. So again, nice moves to the downside. We were looking at Friday's session there. So gold to the downside here on the open, 3 charts in the red. To the downside, 4 charts in the red, and then eventually 4 charts in the green. So gold, very nice move today. Taking a look and finally wrapping up here on the 6E. Again, overnight session downside. You can see we went ahead and tightened that up on a 20. If you go down to a 10-tick range chart, not as bad, not as choppy as some of the U.S. markets here, as we saw price action on the European markets downside, 3 to 4 charts. Again, just reversing that back upside up across the T350. So nothing complex here, guys. T3 moving averages above and below the 50-period moving average, set to a T3 Tim Tilson's moving average to keep you in the trend, exit and re-enter. So not much action there besides the up and down on the European market. Take a look at the daily gaps across the board. Daily gaps, again, we left them. Crude with a daily gap here at 234. 58.25 there on the NQ, 1650 on the ES. So we have open gaps up above that were remaining in the, so we know market eventually will close these out. When we'll close them out, I can't tell you. However, with probability and that we have open gaps down below, let me go ahead and squeeze these up a little bit, show you where those open gaps are. 15,924 there on the YM, 40.17 on the NQ, 18.60.75 on the ES, and crude as well. I don't know about crude here running down to 40 or 37 at this point, but I can tell you if the market is in trend to continue downside, and how would we know that? Well, we take a look at the daily big pick and see where we are right now. The probability increases. Again, intraday, you're always ready in both directions. However, if we're continuing to migrate downwards and we know we have an area of interest, what is the probability that the magnet will be drawn to? Well, we'll take a look at that here in a minute. Let's just take a look at the VPOX right now. 600-day VPOX again remaining upside as price action moves downside. But these VPOX that have been left from a while back, price action now closing these out. So how many VPOX do we still have? Well, we got those levels down below. So what you look at here is you look at the daily gap. You know that you have an open gap, open gaps down here, 18.60.75 on the ES. You have as well open VPOX. Probability is that we possibly could be continuing to move down and close out these former levels of concern. So we take a look at the daily big pick, see if trending markets are moving that way. Take a look here at the crude as 50 is now below the 144. It's been a while since we got that. We said on Friday session market close that price action looked like it was going to cross over there because we were just about to close below. And so now crude downside, downward trend, and now price action in between the 50-200. So we want to look to the 200 period moving average for support, or if price action holds up at this former low and we kick back upside, we'll close up some open gaps and still remain in this $45 to $50 range. All right, let's wrap it up on the last three indices here on the NQ, YM, and ES. Again, now all price action down below, as we can see the open gaps up above. We are below the 200 period moving average. Volume greater than almost Friday session, but again, we are in confirmed downward trend. So as long as the 4-hour chart continues downside and we remain under the 200 period moving average, then the consensus of the T3 trader here is that price action will continue to migrate down to these lower open points of control, open gaps, and continuing to close out former open points of control there. Always being ready intraday for both directions. Higher probability, as we saw on the charts today. That's right, higher probability as we saw on the 50-144. There it is. 50-144 is the downside. So there you can see the trend is downside. The bigger picture is downside. We continue to thrive to the short and remain in the trend that much longer. All right, that concludes an insight into the daily trend on the futures. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra, my trading mantra, one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me on my charts, and as always, I leave my bias at the door when trading. Hey, Jedi traders, before I let you go here, futures, ETF, and market cap leaders, make sure you check it out. Each week I do a market outlook covering all of the listed markets here, from futures, ETF, market cap leaders, all the way down to total stock market index and the Jason Kelly index here. And make sure you check out the weekly supplemental. Go ahead and click on it. Weekly supplemental pulls up a 99. We're up to 99 pages. 7th issue here covering the indices. Just go ahead and click on any of these. Pulls up a chart where we are, what are the current trends right now, and you can see based on a daily, 4-hour chart, a daily and a weekly, where the current trend is, where's the support levels based on the moving averages. Again, when you want to put this all together, for instance, if we're taking a look at a stock, whether it's Apple, Facebook, Google, you're taking a look at the right-hand side, which is the bigger picture. The left-hand side is the intraday. You want to get the intraday in the same trend as the 4-hour chart and looking for support to get back long. Obviously, the shorts right now in stronger contention, so a lot of those I recap. And go ahead, I do a couple videos in the video links in the newsletter here that hopefully you'll get something and supplement to your current trading style. All right, have yourselves a Blue Zone day. Enjoy wherever you are, whatever you're doing. as we look ahead to this week, by the way, let me go ahead and just take a look at the econ data before we go. GDP out tomorrow, Red Star event, Janet Yellen on Wednesday, pre-holiday weekend, Fed speakers coming up, so a lot of still action to come this week. Being that it's summertime, you never know, but afternoon trading sure revealed itself as that. All right, guys, good day, good night, and good trading to you.